Family Foundation has been tracking public opinion on Obamacare for nearly 4 years now. 53% of Americans now have an unfavorable view of the law. That's up 8% in just 1 month. More and more people in the healthcare industry are getting stung by Obamacare. Hospitals across the country are closing or are struggling just to survive.
We're having to look at all of our expenses and look at all of our revenue and see what we can do differently.
She says reimbursement rates have been reduced because of changes in the state health plan and Obamacare. The hospital will try to renegotiate its contract with Blue Cross and Blue Shield, the state employee and retiree health plan, to get a better rate.
You can have the revenue there, but if your reimbursement's been cut, and we were hit pretty hard with the Blue Cross change on the state health benefit side.
That facility is losing about $8,500 a day. That's $250,000 a month. This as the legality of Obamacare plays out in court. And right now, the big question is, does Obamacare, the law, mean what Obamacare says? Joining me now, private medicine advocate, Obamacare expert, and Daily Ledger contributor, Patricia Newman. Patty, we're talking about, of course, the ruling out of the D.C. Court of Appeals, which found the wording of Obamacare says that subsidies can only be handed out by the states. The problem is only 14 states set up exchanges. That left 36 to use the federal exchange. But if you listen to other people in the mainstream media, present company excluded, it's not exactly how they explain it.
No, they're trying to make, to focus on, well, you know what the intent of the law was. They didn't mean that. But they are not telling us the truth. And the truth is that written in Obamacare specifically says that these credits only will go to those states that set up an exchange. But it goes further than that. While talking about these tax credits, they make mention of Section 1311, which is how these state exchanges will function and how those tax credits will be dished out, pretty much. It never mentions Section 1321, which is where the federal exchanges are.
So in other words, the law is pretty clear, and it's not just one mention that there will be state exchanges and that's where the subsidies will go through, but it's multiple mentions?
It is multiple mentions. So as they're talking about these, they make reference to the section to which it applies, which is only those states that set up an exchange. Interestingly, the IRS, in their original wording, also wrote that the tax credits would go to those states under Section 1311. And then they changed the wording. Well, our Office of Oversight found in a report that they later changed the wording to include Section 1321, and some of the staffers were very concerned that they had no legal authority to add that additional section.
So in other words, they rewrote the law. And that's basically where we stand with the federal exchanges. The IRS went in there and said, hey, wait a minute, we'll just tweak this a little bit, and we'll change the wording around, and we'll create this federal exchange because the states are simply not cooperating. And basically what they were trying to do was coerce the states into setting up all 50 exchanges, which of course never happened. But it's nothing new that the federal government tries to force states to do something by bribing them or trying to coerce them.
Well, and that's exactly how we would call it. It's coercion, and it is a very common practice of the federal government. The most obvious example is Medicaid. For Medicaid to be able to function in states and be managed and receive the federal dollars, they have to manage under certain federal regulation. And it's very clearly stated that if, for example, they do not follow the rules of minimal federal poverty line when they allow eligibility for somebody to receive Medicaid subsidies or, services, coverage, that they can lose the federal dollars. They also have to respect immigration law to give out Medicaid. So this is not the first time, but that's not the only example. HSAs is another example. The health savings accounts where you are allowed to put money away for healthcare purposes into a bank account pre-tax dollars. Only states that set up insurance plans that have a high enough deductible and that follow the federal regulations as far as how much money you can put away per year are allowed to receive federal funding for the establishment of health savings account.
Right. And,
so,
you know, it's pretty clear, Patty, that Congress, as Nancy Pelosi said, did not read this bill. But having said that, if this ruling is allowed to stand, of course it's going to be appealed and it'll probably end up in the Supreme Court. But if it happens to win in the Supreme Court, it will effectively shut down Obamacare because it relies on these subsidies. I think 70% of the people who signed up on the federal exchange got a subsidy. But it does not necessarily kill the individual mandate, correct?
No, because the wording of the tax credits has nothing to do with the individual mandate. A lot of people in the media are saying, well, you know, then the individual mandate, it's going to go. And the only way that's going to go is if our dear leader uses his pen and his phone, because it would be illegal. Like your last, one of your last guests said, this law, for that to change, has to go back to Congress. And this president is never going to send it there. So the individual mandate will remain. That will consequently increase the amount of dollars that individuals have to spend on their premiums. Therefore, they're not likely to be paying for those policies. In the first 3 years, most people will be able to afford the penalty, but after that, it will be a problem. The other problem by these people not purchasing insurance because it is too expensive, then is the fact that the only people that will sign up is those that get sick. Again, we have that 3-year period of those famous insurance risk corridors where the insurance companies won't care because they're going to be bailed out by our tax dollars. So for the first 3 years, they're going to be cool. But after that, they will go bust because you cannot have an insurance plan only when you get sick.
It's a disaster. It's a government-run healthcare. Single payer, here we come, unfortunately.
Well, hopefully not. Hopefully it'll create a free market for physicians where they can then deal directly with patients, get the insurance company who's now has been thrown out of business thanks to Obama, and really save on money, free market competition.
I hope that happens and run Obamacare out of business. But then again, you know, I want Santa Claus to appear too on Christmas Day.
Just got to be optimistic once in a while.
All right, Patty, thanks.
Thank you.
Coming up next, grading Obama as the Daily Ledger continues.